Welcome back. You're watching us here on Halftime Report. We've been speaking about the consumption space for a while right now, the impact that GST and income tax rates, etc., would have on overall consumption. But the important part is, over the last 3 or 4 years, we do have a big increase in overall expenditure that households have been making in the country, be it rural or urban. So there is this very interesting report which has come in from Worldpanel, India's Kharcha 3.0 report, where they surveyed over 6,000 households, and this is what they found out. All India over the last 3 years, the monthly quarterly expenditure has increased from 41,800 to close to 56,135. That's all India. If you look at the urban spends as well, 52,700 turned into 64,500, went all the way up to 73,000. Rural India too has seen an increase, not as much in as comparison to urban, but it has seen an increase nevertheless from 36,000 all the way up to 46,000. The important part, there is increased financial stress. Perception of managing expenses, 38% of the respondents said that they're just about managing, 45% were struggling, and just 17% said they're living comfortably. And most of these expenditures are actually bunched towards the essentials, daily use items. So you have groceries, which account for 24%, utilities, communication, commute, another 19%, dairy, fruits and vegetables. So nearly more than 6/10 of your overall expenditure goes into essentials, and the others go into education or EMI, leaving very little for consumer discretionary items. Fashion and entertainment, for instance, is just about 6%. So increased spending observed in education and debt categories. They are prioritizing essentials over luxuries, and there has been notable preference for affordable and local brands, and there have been cutbacks on impulse purchases. What does the future look like? The respondents, only 11% of them expect improvement. In fact, 59% expect things to be the same, and 30% expect things to worsen from here on. This obviously was a survey. The respondents spoke in April. Thereafter, there was that income tax cut. The RBI rate cuts have come by. The GST cut has come by. Are things improving or not on the ground? What the outlook for the consumption space is? We have the authors of this report, K. Ramakrishnan, who is obviously the Managing Director, South Asia, Worldpanel Division, joining in. Thanks a lot, Ramki. Always a pleasure listening to you, reading your insights on the consumption space. This Kharcha 3.0 that you've made exclusively for CNBC TV18 and its viewers. I have to ask you, from the time these responses came to now, there has been these cuts.
Yes.
And the hope is that there will be more money in the hands of people.
Yes.
Do you think things will improve?
I certainly think so. Just one correction to what you said. I think the income tax part of it came earlier.
Yes.
It's only the GST thing that came.
Yeah, but I mean, the impact comes in from April, right? The announcement came in February.
Correct. But most of these things, when it comes to, these are actually what people claim that they have spent or what they've increased or decreased. We also have data on what they actually purchased, right?
Got it.
All the categories that we've been sharing with you. So there's always not, these things don't go hand in hand all the time. Like, for example, I'll give you a simple example of, let's say, biscuits, right? If you see in the study right through, people have said that their expense on biscuits have gone up and they spent more on biscuits, etc. But if you see actual data on biscuits, what they've actually increased by is about 1%, and in fact in consumption, and in fact even less by 1% in terms of value. So there is a difference between conscious consumption and unconscious consumption. You know what I mean? So when people actually think that they're consuming lots, but they actually are not. So that's the thing to make note of. Your question on the future, certainly, I mean, this is very often when you ask people for perceptions, etc., they tend to feel a little more negative than they actually are. So to that extent, we'll have to be a little careful about reading this. Having said that, post that, the kind of inputs that have come into the picture, specifically from an FMCG lens, if you look at, is meant to boost consumption in some way or the other. What comes in the way is perhaps these, what you call as the rupee packs, 10 rupee pack and 5 rupee pack and 15 rupee pack, which are a major part of FMCGs. So how will that play happen? Nobody's going to decrease it to 9 rupees. So they either increase the volume or, perhaps margins can come for play. So that is one part which can come in the way, but definitely this input is going to have a significant say in terms of consumption. Even otherwise, we thought that in this calendar year, the last quarter, we'll see an uptick because rural has all the things going right for them, right? I mean, the monsoon is good, harvest is good, Support pricing is good, and the non-farm employment is also good. So all of these factors being good, rural should have an uptick.
Monsoon, some would argue, is actually not too good by virtue of being too good because there have been so many floods, etc. in the northern parts of the country.
I mean, it's always going to be a mix, but if you take an average view of the country, I think most cases one would agree that this has been a good monsoon. So from that point of view, all these factors positively indicating a growth as far as rural India is concerned. So from a rural growth, which is about, let's say, 50% of India's households, 67% of India's households and 50% of consumption, that growth would have anyway driven a better growth in the last quarter of the calendar year. Add to that this inputs, and we're definitely optimistic about the last quarter.
So in the last two surveys, I've seen that your urban expenditure has risen 39% in the past two surveys, and the rural has risen by around 29%.
Correct.
Is this historically some of the highest jumps that you've seen in terms of the surveys that you've taken? And based on, historically what you've seen, are you expecting these kind of percentage jumps in the future? Say we're talking 3 years down the line, are you expecting another 40% jump in urban expenditure?
Unlikely. One of the things to remember is the base year. The base year is too close to COVID. So the base was low, so that indicates a very sharp growth. So 39 and 40% is a very, very high piece of growth. So, but that is when you look at the wallet as a whole. So it doesn't specifically talk about any particular aspect like, let's say, grocery or anything like that. So what one needs to look at is everywhere there is an increase in expense. I mean, because there is a cost increase, there is inflation, there is food inflation. Even though it keeps going up and down, there is inflation. Having said that, how are people playing with their wallet is what you should ideally look at in a study like this. So what Mangalam was speaking about, he said that the EMIs, debts, and those things which have gone up. Actually, if you look at it as a percentage, this is what the numbers that you see on the screen, these 24, etc., are what percentage of the wallet goes towards this. So as a percentage, EMI has gone up. But groceries, while they've remained at 24, while the total expense goes up, the 24% of a bigger value also goes up, right? So what is happening is, because of the higher propensity to spend on education, because of a higher propensity to borrow and spend in tight times, those are the two which are actually going up, education and EMIs and debts. The third one, which is actually seeing an increase, is selective in urban, in the higher income circles, is the entertainment one. So therefore, little more spent as a percentage on entertainment. Grocery remaining flat is purely a function of the fact that the overall wallet itself has gone up from there. So therefore, that 40% jump that you spoke about is unlikely that it's likely to repeat itself. It will moderate itself. So actually, it's better to look at the last year to this year, because these are clearly out of COVID or clearly out of any base effects.
What about discretionary side, right? You said in urban, there's slight bit of that increase that's come in fashion and entertainment, but is that going to be increasing a bit more? Do you think consumption on the discretionary side is now something that will grow faster?
So interestingly, if you look at what people have said they would do in case this continues in the future, what would you do? Is a simple question asked. Some of the questions that they've said is, some people have said that nothing, I'll hold on to what I'm doing right now. Some people have said that I'll decrease the purchase of discretionary and premium. And some have said they will replace with cheaper alternatives. But the percentage of cheaper alternatives is actually lesser. So that is actually heartening to say that the percentage of people who have said that they'll go for cheaper alternatives is lesser, which means that we have to some extent come to a situation where we are used to a certain level of consumption or a certain category of consumption. And that is likely to kind of continue is what this study says, despite the fact that there is going to be a perceived pressure. And
that premiumization trend will also continue, that means that. That is the indication, at least.
So there are two ways to look at premiumization. One is whether people are actually spending more money or whether they're buying premium brands. There's a difference between the two. Because even premium brands are available at 10 rupees, right? So when people buy a 10 rupee Tresemme, for example, or a L'Oreal at 10 rupees, for example, they're actually buying a premium brand. That is also considered premiumization. That is growing because of marketeer actions, saying, I want people to try, and if they're happy, they would like them to continue. On the second hand, are genuinely higher prices, or people are moving towards higher payment of higher prices, that is something which is not as fast as the first one that I spoke about.
So that also speaks about the lipstick effect, right? If your income does not increase so much, you buy stuff which you can afford, the best of that. Just a final question before we let you go from my end. If you had to put your neck on the line, so far this year, what has the sector grown at? And the remainder of this year, what do you expect it to grow at? What are the categories that you believe will outperform? What are the categories which you believe will stagnate?
Okay, so far this year, if you look at a MAT, 1 year ending July, that's the last that we have. the growth rate of FMCG is around 4%, 3.94%, with actually urban being slightly higher than rural in terms of a household consumption lens, if you look at it. What we would expect that to happen in the last calendar quarter is that 4 is likely to, in our belief, will go up to about 4.5, 4.6. So there is a growth that is expected, more driven by rural than by urban. The urban tightness will continue. This is in the absence of any inputs. But now there are inputs. there is a GST and so on. So that 4.5 we actually strongly believe can go close to a 5 to 5.5 kind of a number. So the last quarter of this calendar year it can be a good quarter for FMCG as a whole.
Okay, just before we let you go, I just wanted your thoughts on the entire consumption pattern.
Yeah.
Because on one end, we have the rupee depreciating, we have tariffs which we have to reckon with, which will have an impact on possibly employment in certain sectors.
Sure.
But on the other end, we do have the GST rationalization which has come through.
Yeah.
Is the GST rationalization enough to offset the consumption stress we might see because of the tariffs and the prolonged effect of it? Yeah. And what's your sense in terms of the assessment of consumption as a whole?
Yeah. So it's a very interesting question. The GST change or rationalization is real, right? The rest is perceptual.
Got it.
Right? If you talk about, let's say, tariffs or any of those, they're all noise in the air. I mean, these things tend to have a higher share of voice than share of mind. you know what I mean? So we all talk about it. People in boardrooms talk about it a lot more. But to the average consumer who's buying FMCG, going to the shop and purchasing atta and detergent, they know something is happening at the back, but they don't pay that much attention to it, number one. Number two, will it actually result in an employment change in terms of an employment reduction? Only in the extreme case of, let's say, IT companies being, IT services being slapped with tariff, which is only a talk right now. I think it's very far away from reality. So I don't think that's going to affect in such a big way. So all these global geopolitical things are, from an FMCG lens, from a common man perspective, are far away. But the GST thing is real. So from that perspective, the positivity is a little more.
Thank you so much for putting all those things into perspective. The key takeaway from here on is that earlier it was growing at around 4%. Now it will perhaps grow at closer to 5% in the second half of this year, largely because of the inputs and the underlying strength that we're seeing in rural economy. That is good enough for everyone who's seeking some sort of growth come by in the FMCG stocks. Ramki, always a pleasure speaking with you. Look forward to speaking to you more often.
Thanks a lot. Yeah.
With that, we'll take a short break. Come back on the other side. We'll discuss more on the markets and individual stocks as we move forward. We have Sachidanand Uttekar joining in with from Trade Bulls with some trading strategies.